So let me give a few just starting remarks, and then I'll ask questions from both the audience as well as myself to our panelists. So what does it take to get institutions involved with Bitcoin, or at least get more institutions involved? So just a few opening comments about that. First, we can't ignore the retail side, because it takes retail clients to ask their institutions that they want to hold Bitcoin. So I think that retail is a very important driver. Second thing is that the spot Bitcoin ETF really adds credibility and acceptance, and it makes Bitcoin, really puts Bitcoin on the map. Obviously started in the US, thanks. It's come to Hong Kong, and I think that this is going to be a real driver for institutions, especially if you get companies like China AM, Harvest, Bocera, and of course BlackRock, Fidelity, Vanguard, Invesco, all promoting and issuing Bitcoin products. We have a regulator on the panel, and it's super important that, that the institutions feel comfortable that holding Bitcoin is not illegal. And on the flip side, that it's encouraged, that the Hong Kong FSAs told their banks, you really shouldn't turn away a banking customer just because they're in crypto. So you want the institutions to feel comfortable. We have two custodians on the panelists, and it takes really good custody to get institutions comfortable, so that they feel that their Bitcoin's not going to get hacked or stolen or lost in any other way. So it takes a lot of these combinations. You need other service providers, such as Steve's company, that provides liquidity and the technology that's institutional quality to allow institutions to get comfortable to come in. So that's some backdrop and some opening comments that I have. Now I'm going to first turn to a custody question for the both of you. Why is custody important for institutions, and what do you guys do to ensure that institutions that buy Bitcoin are not going to have their Bitcoin stolen, hacked, or otherwise lost? Steve, you want to start with this?
You mean Taka, right?
Taka,
No, sorry. Yeah, so I think the general infrastructure for crypto has really started off, as Mitch said, that it's primarily retail driven. And the premises was trying to get the middleman out of the way so that the investors can have access to the exchanges directly. Now, for an institutional investor, that setup doesn't really work, because they have their LPs, their investors in the back saying that they need a traditional infrastructure. They want custody, they want prime brokerage, they need all these infrastructure ready so that they can convince their investor that their assets are safe. So what we ensure these clients is that we have an access, they have access to custody solutions like Copper, like BitGo, to ensure that there's one piece of that infrastructure that is not sitting on the exchange. So we take that custody element out of the exchange. What we try to do is also take the settlement part out of the exchange as well, because in traditional markets you have clearing houses that does the clearing or settlement of the trades that can move funds from one custodian to another. So, those are the things that we've primarily done to make sure that the infrastructure is ready for institutional investors to come in. And the second part is safety, right? So most of the time, you hear about multi-sig, now we have MPC. I mean, I think all these solutions are fine as long as there is not sitting in a hot wallet that it can be hacked. So at Copper, we use MPC. We don't use private keys. We replace them with shards to make the counterparties separate that holds these shards so that there's no single point of failure risk.
Taka, Steve, do you want to add anything on top of, don't repeat, but anything on top?
Sure, I mean, just back to basics. I mean, why do you need a custodian? Why do you need a wallet provider? So for Web3, wallets are the gateway to the ecosystem. There's a lot of talk about ETFs in the US, in Hong Kong, whether they are in cash settled or in kind settled. Underlying the whole infrastructure are wallets, right? You need good, strong wallets to support the ecosystem. So even though wallet providers, we tend to be in the background and unseen, we play a critical role in supporting the industry. If nobody trusts whether your wallets are going to keep your assets secure, nobody would invest in Bitcoin or crypto. So I think crypto custodians, wallet providers, Copper, BitGo, we provide both custodial and non-custodial solutions. And these are really critical pieces for the ecosystem.
So Steve, excuse me, HB, if you put your regulator hat on for a second, why is Hong Kong's regulatory environment, I know you were a regulator at Dubai and Singapore, but what is it unique about Hong Kong's regulatory policy that is encouraging for institutions?
So I sort of bridge both the government and the private sector. I'm now in the private sector, but I've a strong history in government. So I think what Hong Kong has done is very incredible. Very few jurisdictions have a whole of government support for Web3. This shouldn't be underestimated. All the way from the highest levels of Hong Kong government, they have openly said they support Web3. And for firms like us, this is a very strong signal to give us confidence in investing and growing our business in the region. The last thing as a firm wants is to go to a country where there is regulatory uncertainty, where you may get hit by fines or enforcement actions without knowing what red line you crossed. So the governmental and regulatory support and clarity in Hong Kong is tremendously supportive for Web3.
So if you were a crypto company considering Dubai, Singapore, or Hong Kong, where would you go?
Probably all. Yeah, so we were chatting before this. I think many companies, we definitely go where there's business, right? But all things the same, we look for countries with a very clear rule of law, support for crypto. And I think many of us also, we try to hedge our positions. So it's hard to tell which jurisdiction will pull ahead in terms of business or regulatory support. So we often have offices in more than one jurisdiction.
Got it. Steve, so my question to you is, you're a liquidity provider, you're a tech provider, and it all has to be institutional quality in order to attract institutions. So how do you get institutional clients, and how do you convince them that your solutions are institutional quality?
Okay, I put it in this way. I share with all of us with a database, okay? On the crypto trading volume, in fact, in the global, 20% trading volume is on the crypto exchange, that trading by the individuals. But 80% of the trading volume is on the crypto CFD. CFD means contract of difference. And they are trading by the financial institutions. That's why then we can see that if the regulation on the ETF in Hong Kong, I think it is doing the right thing in the right time, because it is in cope with the market demand and the market trend. And also the financial institution is driving the crypto market in the coming 10 years. And most of our clients are the financial institution, especially for those traditional financial institutions. Before 2018, I can tell you, they are not involved with any crypto trading at all. But after that, they invest in the crypto trading, in the CFD. And also, I see that they only invest 1 to 3% of their assets to test the water. But because of the policy, and they do not really have a full confidence on the crypto trading, okay. But since 2018, they are trading so far. As I know from our clients, that they are going to increase the trading volume. And also, they foreseen that in the coming 10 years, the crypto CFD trading volume will be compatible with the forex trading.
Thank you, Steve. I'm going to take an audience question. And I see a lady here with a burning question, so please introduce yourself.
Hi everyone, I'm Pipper, and I'm from Hashkey Exchange, which is a licensed exchange in Hong Kong, and I'm the institutional BD in Hashkey Exchange. That's why I'm so interested in the topic here. And like since we got two custodian here, so I definitely am interested since I think you know already that Hong Kong has issued a circular about banks offering crypto custody solution for their customers. And have you been talking to all the banks in Hong Kong and then see how like the market interest is?
So I'll answer first. When we first came to Hong Kong with our crypto fund 10 years ago, of course there was no bank that would ever talk to us. But very recently, as we applied for a Hong Kong FSC license, part of the application we had to indicate that we had a bank account here. So we went to DBS and we opened a bank account, which was really shocking to me that we could open a bank account as a crypto hedge fund in Hong Kong. So I think they've become more open now. What's your experience?
Thanks, Steve. Thanks for the question. So yes, we are speaking to banks. So I think the situation now in Hong Kong is that the rules are such that as a third-party custodian, we cannot serve banks or VATPs yet. But I say yet, I think it's a good way because Hong Kong moved very quickly to approve VATPs and get this whole framework up. They don't have a full-fledged custodial framework yet, so it makes sense to allow custody to be provided by firms that they license, be it the banks or the VATPs. I think I have no doubt that Hong Kong in due course will develop a framework for custodians, and when that comes about, I'm sure players like us would consider this. So it's a long way of saying that we are engaging them. We are waiting for regulations to change, but Hong Kong, I think, is doing a very measured approach, and we will get there.
Does your company have a bank account in Hong Kong?
No, we don't.
Why not?
I think the banks would only bank you if you have a license, but there's no framework for custodians, so a bit of a catch-22 situation.
Got it. So do you think that Hong Kong FSC should regulate custodians?
Yeah, absolutely.
Taka?
Yeah, absolutely. I mean, just about a month ago, at the Singapore MAS also widened their regulatory regime to include custodians. So we've sent our intent to apply for it. I think in Switzerland, I'm hearing about custodians starting to get regulated as well.
You
Europe
have a license in Switzerland, right?
The Switzerland, we're part of the regime, but they want to have a specific custodial license. So I think that's a little bit different. We probably have to apply for it as well. I think in Europe, I think in June, the regulations kick in for custodial solutions like us as well. So
does your company have a bank account in Hong Kong?
we don't. Yeah. So
Interesting.
I mean, we don't even have one in Singapore either because now we're regulated there. We do have bank accounts in Switzerland where we have our contracting entity.
Right. Steve, do you guys have a bank account in Hong Kong?
Our company have 11 company, and we have 7 licenses, like the UK license, Mauritius license, Cyprus license, to serve our client who take the liquidity from us. So we have the
Including
license
licenses in
company
Hong Kong.
to sign with
Hong
them.
Kong too.
Hong Kong not ready, but in the future we are planning to get the license number 3. Okay.
3 is what? I don't remember.
That
what
is
3
for the forex trading. That for the fund management company. Okay. And but for the custodian, and we have another company called a brand name called eWire. In fact, it's a digital banking that we're holding the UK license. And we are right now registered a company in Malaysia, Laguan, to get the license for the digital banking as well.
Got it. Well, join me in thanking the panel for this discussion on institutional adoption. Thank you.